Well, hello, everyone. Thank you for joining us today at our Silicon Dragon Global Show. Really appreciate you chiming on. And we today have a wonderful guest joining us from Sydney, all the way from Sydney. We know it's early there too. So thank you, Niki, for being here. How are you today, Niki?
I am well, and thank you very much for having me.
Okay, well, good. So we get to hear all about what's happening with Australian startups and the crossover to the US as well. I know some of your companies have done that, so it'll be really interesting to hear about them. Okay, just few little introductory words on Dragon and Silicon Global. We started out in 2010, and we did our first event in Silicon Valley, then New York, then Beijing, and it's just expanded from there, where we did almost 100 events before COVID hit. And now we've done about 45 events globally and virtually. Almost hitting the 50 mark. So that's coming up soon. Thank you everyone who's joined us along the way. So you might want to check out some of our videos on YouTube. We do post some of our shows afterwards, but we like to keep them live, and we like to keep this as a Q&A. So thanks for joining us. And thanks for joining the Silicon Dragon Circle membership. It means a lot to our continued show. So, all right. You know that I have a couple of books out there. So there they are. And I have a new one coming up soon, which will be added to the collection. So stay tuned for that. But Silicon Dragon, Startup Asia, Tech Titans of China. Tech Titans of China came out in a bunch of different languages, but not the Chinese edition in mainland China, for reasons that people probably understand. So I won't say further. Okay. All right, back to Niki. Niki's joining us from Sydney, and it's what, 6 a.m. your time there now?
No, 10 a.m.
Oh, 10 a.m. I'm sorry, we did the practice session at 6 a.m., didn't we? Yeah, we did. Okay, so there we go. So I love this kind of description that I picked up. I think I picked that up on LinkedIn, your LinkedIn profile. Taking a chance on the hungry, not the proven. And then I picked up during our pre-interview, are we failing enough? So I really like that. That kind of set the stage. So I think what Niki has done is turbocharged startups from Australia, New Zealand, and at Blackbird Ventures since 2012, which he launched in 2012. And what they're looking for is startups that can be the best in the world. They invest in technologies of all types and varieties, just really looking for that winner out there. 4 funds, 1.3 billion in committed capital. Their highest profile deal is Canva, so we'll hear a little bit more about that. And then we get to hear about the unicorns too. There's 6 of them, I think, in your portfolio, right, Niki? 6
Correct,
unicorns.
yes.
What?
Yes, correct.
Oh, okay. All right. So now Niki's been on this startup journey for quite some time. He founded an accelerator called StartMate in Sydney. He's also been a founder or co-founder of 2 startups, and one of them was acquired by Blink. He was an analyst at Jupiter Research, and gosh, I remember quoting Jupiter Research quite a bit as a journalist at Red Herring and other magazines. So thanks for doing all the hard work, Niki. So, all right. Now, as we go along, I'm going to stop the share, and you can start your Q&A. And some of you have already started your Q&A questions in the chat and the Q&A box up here. So thank you for doing that. All right. Let's see if we have any burning questions or burning remarks. Paul Kalman says hello from Palo Alto. And let's see. We have, assuming this is where we ask the questions. Yes, that's right, Benbow. Yes, ask your questions here, or you can put them in the chat box. Either one. Okay. So Niki, why don't you tell us? I mean, I tried to set the stage here. Did is there anything you want to add to what I have said already about, what you're doing and what makes Blackbird special?
Yeah, we founded Blackbird a decade ago on the idea that you could create world-class companies from Australia. Those that are the largest in the world. And if you look at sort of the $100 billion plus companies that have been formed in recent times, it's Spotify from Sweden, Shopify from Canada, and Atlassian from Australia. And so I think the idea of Silicon Valley is permeating all around the world, and all around the world is producing these global champion companies. So the idea of Blackbird was to form a venture capital fund and a community to support Australia and New Zealand founders in building these generational companies. That has certainly come true in spades, and Australia and New Zealand punches far above its weight in terms of creating these wonderful global champion companies. And then because of that, I think also the idea of creating the world's best venture capital firms outside of Silicon Valley is not an idea that is discussed widely enough, and certainly we benchmark all of our fund returns against global peers, rather than we're not trying to be the best Australian venture capitalists. We're trying to be one of the best venture capitalists in the world, and we can do that by helping to create these ecosystems in Australia and New Zealand, being at the center of that activity, and investing right from the beginning, and really sort of concentrating our belief and capital in those generational companies as they succeed.
Right, and you like to invest very early, don't you?
Yes, as we've raised bigger funds, we've invested earlier and earlier. So we actually track how many companies we invest pre-product, pre-revenue, and hopefully it's eventually 100%. Now it's about 80%. We get the chance to make our first investment before there's revenue and before there's product. But whatever the first round is, whatever the startup wants to call the first round, the pre-seed round, the whatever round, we are happy to invest hundreds of thousands of dollars or whatever suits the round in question. But the difference is sort of to challenge the traditional way that venture capital is structured, which is the venture capitalist says invest before you know a company's successful, and then invest nothing after you know it's successful, which never really made sense to me. So a seed fund invests in seed rounds and then stop, and then the company builds a product, has happy customers, starts to scale, and then that seed fund chooses not to invest in anything after it knows the company is successful. So in the case of Blackbird, we have configured our funds and configured our fundraising around this concept of the company relationship being the unit of the business. Not, we're not a seed fund that invests in seed rounds. We're a generational owner of these generational companies. And in the case of Canva, as you mentioned, we first invested $250,000 when it did not have a product or did not have revenue, but we've invested $270 million just into Canva, and we'd hope to invest hundreds of millions of dollars more as it continues to succeed.
So, okay, so why Canva? That's a huge amount in one company. And then you were the earliest investor as well. So you must own a pretty good chunk of it. But why Canva?
I think Canva represents Australia's first chance to have an Apple, Google, Microsoft sized company be born from our shores. Canva, for those who don't know, is a graphic design tool. The sort of graphic design industry has previously said that you need to go to university to learn graphic design. You need to become a graphic designer. So your job title when you join a company is graphic designer. You need to spend tens of thousands of dollars on your computer and tens of thousands of dollars on Adobe software to do your work. And the idea of Canva is instead of just that 1% of people doing great graphic design, it's the 100% of people doing great graphic design. And it started, I think, the first chapter of Canva was on this wave of content marketing where people were, a decade ago, it was weird for a company to have a blog. It was weird for a business to have a social media account. And so I think Canva really tapped into that wave of content marketing or inbound marketing in the first instance, but in recent years has really transformed itself into a modern work suite. And so much more in the realm of Microsoft Office, Canva's presentations product has reached a scale of Microsoft PowerPoint. If you think about a document like presentations, you usually create presentations once or twice a week or once or twice a day. You usually create presentations in tandem with other workmates. And so the original Canva of content marketing and inbound marketing and using it sort of once or twice a month and using it just yourself, to this transformation of using it every single day and using it within a team context has really driven, I think, the growth of Canva to another level. And then the sort of suite of video editing and websites and further sort of data visualization and a take on Canva's personality injected into a Microsoft Excel type setting. You're not going to build a financial model in Canva, but you can certainly tell a story around data through Canva. And so I think that sort of second act of Canva, that global audience of customers, that daily work habit, that collaborative work habit, sort of puts the opportunity of Canva up to the Apple, Microsoft, Google levels of product adoption. Still has a chance, doesn't have a majority chance, but I think has a chance of reaching that level of greatness over the next decade or so.
Okay, so born in Australia and now fairly international, and how much of its sales are outside Australia or New Zealand?
Yeah, nearly all of it. And
Really?
the feature, I think, of all companies like Canva and like Atlassian is even though the company's Australian, from the very first day, they have customers all around the world, and the customers don't know or don't care that the company's from Australia, and they adopt the product because they have this burning need or they have this problem that the product solves. The product is the salesperson, so they use the product, decide they like it, and it solves their problem. They pay for it via a credit card. They invite other team members and add to that credit card subscription. It gets adopted within the department. It gets adopted within the company, and it's selling to the person who uses the software, not the central IT decision maker or not the C-level executive. And I think particularly Atlassian, which was founded in 2002, pioneered this, what's now called product-led growth, but the idea of the worker adopting the product, not the C-level exec or the central IT department. And I think also because of a natural constraint, Australia has a pretty terrible time zone overlap with the major cities of the world. And so because of that, I think that constraint bred the creativity of Atlassian, and certainly Australia and New Zealand have now overachieved in producing these great product-led SaaS companies that are so beautiful and so can grow all around the world from day one.
Oh, sure. So product-led SaaS companies, you like them a lot. I take it. And what other sectors are register high with you?
So originally a decade ago, that was the central thesis, to invest in global software companies right at the beginning.
Okay.
In 2014, we met a guy called Tim Kentley-Clay, who was the CEO and founder of Zoox. Zoox was a robotaxi company that was ultimately sold to Amazon in 2020 for $1.3 billion. We met Tim when he was just in Melbourne, and it was just the kernel of an idea. And the idea of a robotaxi network, the idea of building a car that drove itself in 2014, when it was completely illegal to do so, where it was really only Google that had begun to experiment in the area commercially, and you had the DARPA project, but it was still very sort of strange to be pursuing this vector of technology company, and the ambition to reinvent the experience of the vehicle. So not only the technology breakthrough is required to have a vehicle drive itself, but also then reinventing the user experience. And certainly the business model of a robotaxi. If you build robotaxis and operate a robotaxi service, you can earn hundreds of thousands of dollars per vehicle, versus if you build Tesla and you sell electric vehicles, you get a one-off fee. So you might sell a $90,000 Tesla, and you get $20,000 of gross profit, but that's it. Like you sort of, it's a one-off upfront fee versus hundreds of thousands of dollars per year per vehicle in a robotaxi setting. And so really that imagination across both how the technology breakthroughs would happen, reinventing the sort of user experience of the vehicle, and operating at this sort of business model that was very clear that if you operated with that business model, you could bring to market the technology very much more quickly, because again, it's lucrative to operate a robotaxi, and so you can afford to spend all of the money on the GPU compute and the large battery and the sensor suite and so on, if you earn hundreds of thousands of dollars per year. And so I think all of those insights combined, and Zoox, we led the first round of Zoox, and we ended up investing more than $100 million into the company over its life. I think that more than anything opened up our eyes and a new vein of investing. And although global software is still 2/3 of our investments, about 1/3 is we sort of fondly call it science nonfiction, which seems crazy at the time, but is not crazy in hindsight. And the more you look and the more you inspect, the more possible it seems, with just the march of technology, the cost of components coming down, the cost of and the quality of results from machine learning or whatever it might be, getting so much better year to year, makes all of this possible at this point in time, or within the sort of construct of a 10-year venture capital fund.
All right. So when you're deciding on a startup to invest in, you look at the founder and the team and the innovation and the ability to scale and anything else that stands out. And what is the most important factor?
Yes, well, in from the specific point of view of if you're going to invest before product and before revenue, it's kind of like you only have the founder and the idea, and so that's all we get to look at in the beginning. Yeah. So certainly, I mean, founders are this unique set of psychological attributes that allow someone, or allow so few people to achieve something with very little capital, very little structure, very little time, and it's just a rare breed of human who does things versus talks about doing things. And so there's a whole, I think, psychological makeup of what makes a great founder. And I think the good idea, I think people do underestimate the power of a good idea, and a good idea at face value sounds like a silly, everything's a good idea. But I would suggest sort of one measure of a good idea is does the as you speak with the entrepreneur, is the second meeting better than the first meeting? Is the third meeting better than the second meeting? It's sort of, as you explore the idea and as you explore the level of depth and as you dig down into the insights and how they've made trade-offs and the product decisions, and does it get better? Conversely, a bad idea is something that sounds interesting, in the two-sentence version, and then you start to ask questions, and it's like a facade, like the front of the building, and then you walk through, and you're like, oh, actually, there's no building, there's just the front of the building. And so I think that depth of thought, that depth of thinking around the product roadmap, and Canva and Zoox were right at the beginning. They had thought so deeply about the problem, so deeply about what was wrong, so deeply about how the sort of systematic change could be brought about, had so many strong opinions on small details and strong opinions on the way they go about acquiring customers and the reason why they made these choices. And so I think it's that depth of thinking and that depth of, it's not product, it's more as product roadmap. And oftentimes it's, in Canva's case, the product roadmap was a decade long, and they almost followed that to a T. So even the sort of axiom that you don't know and you'll change your product and you'll change it was actually you reflect back and obviously it all went very, very well, but they actually followed that path that was in the head of Mel in 2012 fairly accurately, which is again quite astounding.
That is. Yeah, what a great story. A female entrepreneur as well, Melanie.
She
So
is
yeah,
someone very, very special.
yeah, she is. I remember meeting her, and she was on one of our shows in Sydney. I think maybe that was back in 2013 or 2014.
Well, you had very good taste back then, because it's obviously turned out to be a wonderful story after that.
Yeah, but how do you, I mean, you have to really make a judgment call on these people. So what do you look at? I mean, what kind of triggers your thinking? Like, is it, I don't know, the way they walk?
It's one question to answer is this person doing their life's work? So in the case of Melanie, she had taught graphic design at university. She had founded a high school yearbooks business, so almost like this microcosm or this single, small use case of what Canva could transform. And so she took all of those insights and formed the view of as to what Canva could be. And I think that sort of and again, when she started Canva, I think she was in her early 20s. So even it was almost like 100% of her working life before then had been steeped in this learning about the graphic design industry, and why did 1% of the people be able to do, why were 1% of the people able to do it and not 100%? And so I think that sort of story through their journey to the idea is always very, very important. Are they scrappy? Are they relentless? Do they just get things done without complaint? Those are the hints of what could be. Also, at the beginning, we are not looking for certainty. We're not looking for the person to have the answers. We're looking for the person to have the questions. And so it sounds all neat and tidy, but in venture capital, the feature of the asset class is, again, in the story of Canva, we invested $250,000 of $270 million. So we invested 0.1% of our total investment in Canva in the first round. So we should have to know 0.1% of what we know now. And you're really just saying to have the courage to go on an exploration, to go on a journey with the founders to see if it is a good market, if it is something that is solving a problem or transforming a customer's life. And so I think at the beginning, it's not tying yourself up too much into due diligence. It's saying, is this a worthwhile journey? Is this person someone who we'd love to go on this exploration with, and sort of approaching it from that point of view? Because again, the first investment turns out to be a very small percentage of your total investment if it does go right.
Okay, good. So a question here about the psychological makeup of great founders, and the person wants to know, could you riff on that some more?
Yeah, it's a whole host of these kind of double-sided emotions that are not universally positive. I would say, oftentimes people have this steely inner competitiveness, or this sort of chip on their shoulder, or almost sort of unhealthy obsession with a problem and how it should work and how it does work, and this sort of obsession with changing the way the world sort of currently works. I think the sort of person is, again, just does, not talks about, and so just is biased to action, can achieve things with a small amount of structure, a small amount of capital, sets themselves, has this again almost unrealistically high standard for themselves and for others, and is always holding themselves to this very difficult account, but that is what spurs progress. That is what brings about change and brings about momentum when there is zero momentum in the beginning, and then is just has to be very opinionated by its very nature of having a vision for a dramatically different world. Requires that person to have very strong opinions and very strong instincts as to how things should work. Again, not positive and negative aspects to that. We love, as you said, the hungry, not the proven. That is change brought about by outsiders, not insiders. And so if you're going to invest in outsiders, usually like have no business experience and no business experience in a particular problem or category. They have naivety. You know, naivety is almost seen as 100% negative by a lot of people, whereas naivety is probably, I don't know, 30 or 40% positive and 60% negative. You need the naivety to have fresh ideas tested and fresh approaches tested in a particular market. If you were sort of thinking, oh, how can I create a trillion-dollar company? Okay, well, let's look at all the trillion-dollar companies. Let's look at all the people who founded them and look at their lives at that point in time. Well, you had Facebook and Microsoft, which the founders hadn't finished university. You had Google, where the founders had just finished university. I think Steve Jobs at Apple had worked at Atari before he founded Apple, but that was his first job, and it wasn't like it was like an entry-level kind of job. So if you were going to say, let's create a trillion-dollar company, well, then you would say, let's look for people with no business experience and, you know, probably haven't finished university and so on and so forth. So it's, again, I think naivety does play such a wonderful part of how things are dramatically changed and how the world is dramatically changed. And so you just need that optimism, that, you know, again, confidence and arrogance. Like I said, as if they're two different things, but there's some base emotion that if you want to say it in a negative light, you say arrogance. If you want to say it in a positive light, you say confidence. And again, like this it's always like these complicated emotions that are part of these rare breed of people who go about and actually achieve something in life.
Sure, that's great. So what about your own experience as a startup founder? What did you learn from that has helped you be a better venture investor?
It gave me a lot of empathy. It gave me a lot of empathy for the fact that the process from 0 to 1 is so different than the process from 1 to 100. So I think like the whole university system and education system is all set up around optimization. Like you go and get an MBA, how do you run a business better? But the business like it's already a business and you're running it better, versus how do you create a business, or how do you discover whether you're doing something that matters or not to your customers. And so that discovery process is much more of a scientific method style approach. And I don't think I appreciated that fully in the beginning. I would say I wasn't particularly successful in my own founding journeys of the two companies. So I learned a lot from failure and things not working and so on. But again, it just brings an empathy. And then I think the investing business as a whole is just such a humbling business. You're more often wrong than you're right. You're more often feeling embarrassed or sad about the tragic failures or you know, all of those great founders. Again, the sort of, you look at the success stories and you say, yes, they were great founders, but you look at the ones that do fail, still great founders. It's just this combination of great founders, great product, great market and market timing, and they all need to come together. And so you have many cases where it's great founders and even great product, but still failed business or still doesn't work out. And it's so humbling. And I think just the empathy from being a founder gives you that entree into being an investor. Usually the other thing I would say is that investors, particularly when it doesn't work out, which is most of the time, add stress to the situation versus remove stress. I think we have this sort of guiding principle of Blackbird is, if it isn't working out, what are some ideas as to how to remove stress from the situation? How do we help those employees of the company get another job within a portfolio company or ecosystem of startups that we respect? How do we help the founder, again, who's put their whole life into the company, land softly, not have any sort of financial distress, helping them go through the process of winding up in a cleanly way. So I think sort of again, some investors, or I would say your sort of character is revealed at the extremes of failure and success. So if you're failing, then usually character is revealed, and usually in an investor sense, you find out their true character in these processes of companies not working out. And then also in the cases of extreme success, you tend to find out who people really are, and people might say they've changed or so on. But I think those extremes offer an insight into the character of people. And again, just from the viewpoint of everything, it's a humbling business. It's an embarrassing business. The empathy of all of these situations, I think that has helped in how before those experiences before Blackbird have helped in the building of Blackbird.
Oh, well, that's great insight. There's a question here from Ben Bowie about valuation. It's a kind of a technical question, but he wants to know about what valuation method do you use pre-revenue? And he has a number of options here, so there's 6 of them.
Yeah,
here.
I would say none of them.
Any of them,
yeah,
or all of them?
None of them. I think the fantasy is that you can do like if you just have a set of people, there is nothing really to do due diligence on, because they haven't created anything. They don't have a product. They don't have revenues. So they don't have customer contracts. They don't have other sort of material things that you can do legal or financial due diligence on. They're often forming the company to give them the money and so on. And so it's all about the future. There's literally zero at the beginning. I think the way valuation works in practice is whatever they raise, it's 20%. And I think 20% is this magical number where the investors feel like co-owners of a business, where the founders feel like they still very much control and very much it's their company in inverted commas. So I think the valuations are set based upon this sort of gravitational principle of if you raise $1 million, it's going to be a $5 million valuation. If you raise $5 million, it's going to be a $25 million valuation. And really, I think it's that simple. The other way to answer it would be people are working backwards from the successful outcome. So they're looking at these successful public companies, and obviously the FANG type stocks, but also the sort of rising SaaS superstars or the Shopify, Atlassian, Spotify stories. And they go back one round and they sort of discount it back with progress and likelihood to get to that next step. And then they take that step and they go back and they go back and they go back. And so you go right the way back to the first round of capital and you sort of get this valuation that is essentially a low probability of that eventual successful outcome. And so the reason why, at least it logically makes sense to me, that valuations have gone up is because that eventual outcome has just gone way up. Like no one would have imagined that Apple would be a $2 or $3 trillion company. No one imagined like $100 million ARR used to be the rule of thumb of like, oh my God, that's like the sort of promised land of the end point of a company. Yeah. And what they found out was that as soon as the company got to $100 million, they just kept on going. And now there's like 20 startups 20 companies that are $1 billion of ARR or more. There's Salesforce that is $25 billion of ARR and still compounding away at 20 or 30% per year. And so essentially valuation is this probabilistic approach to here's the successful outcome that 99.9% of people don't get to, and here's the starting journey of all of them, and therefore you discount it back according to all the valuations at each stage just to get to the seed round price.
Wow. Okay, so there's another good question here from Brady Startmate. I don't know, is that his real name?
No, Brady does work for Startmate, but he has an adopted Startmate as his last name.
I see. Okay. What viewpoint of yours from 4 years ago would you disagree with the most? So
as you know, we founded Blackbird with this global from day one mantra, and it became such a fixed mantra that we would only invest in companies that were from Australia and eventually New Zealand. And they had to be, whatever they launched, they had to be global. They had to have customers all around the world. They couldn't focus on Australia first and then go overseas. And so what that meant practically is Blackbird has not done sort of much fintech investing at all, because in fintech, the product is governed by a regulatory environment, and those regulatory environments are bounded by a country. So you have to choose to launch in a single country with a fintech product because of the regulatory container of the product. We did not invest in Afterpay. We did not invest in Airwallex. Airwallex in particular had a great sort of front row chance to invest in the seed round. And Afterpay is a very unique story. Again, it went public on its seed round. So there was that extra level of out of the box sort of fact pattern. But I would say, again, Blackbird wants to invest in generational companies. Australia has produced 3 generational companies, Atlassian, Canva, and Afterpay. And our investment hypothesis, global from day one, meant that we would absolutely miss Afterpay every single time. And so I think we strongly reflected on that. And I think now we are less dogmatic about global from day one, customers all around the world, and we are more dogmatic about what is the scale of this ambition, or this how original is the thinking. And Afterpay was pioneering in its originality, and it was also very, very clear from the beginning that it was something different. Like the product itself sounds like so menial, like so straightforward. It's like buy something and pay in full installment payments. Like that doesn't sound interesting, but they built this almost like cultural or religious movement around the product, and then it's as much as a payment mechanism as a referral mechanism for those customers to discover other Afterpay merchants and to decide where to do their shopping. And the cohort behavior is just like use it 7 times in the first year, then use it 20 times in the next year, and then use it 40 times in the year 3. And it was just very clear that Afterpay had tapped into something very special in a cultural sense, and they proved it out in Australia. And you know, they launched in the US. The US is by far their biggest market. They, you know, Klarna, Affirm, and so on are now copying them, PayPal. But this originality, and I think they sold to Square. It was an amazing result. Like the company was founded, I think, in 2016, and it sold in 2021 for well, it was then $39 billion Australian. So wow, like, you know, all around the world that doesn't happen. But I still think, you know, that company in particular had a chance to compound over many decades and to become you know, a truly great company on the scale of a, you know, MasterCard, Visa, almost.
Yeah. Well, so you definitely have had a lot of success stories from Australia on a global scale as well. But are you also starting to look outside Australia, New Zealand? I mean, would you invest in Silicon Valley or London or anywhere else?
Yes, we invest in Aussies and Kiwis, and so it's not tied to Aussies being in Australia. It's not tied to Kiwis being in New Zealand. So Zoox is a great example where Tim Kentley-Clay was from Melbourne, but Zoox was from the Bay Area. You know, nearly 100% of its employees were in Foster City. We've invested in Aussies and Kiwis in Shenzhen and Singapore and London, and you know, as I said, a bunch in the Bay Area and across the US. And so it really is tied to the founder rather than tied to you know, our countries. And the reason is we put so much love and effort into building a community, and and I think if we do build a community of the best founders in Australia, from Australia and New Zealand, we have the best chance to invest in their startup when they choose to found it. And so I think the community is borderless. Australians, you know, tend to be quite parochial, and there's a, you know, huge community of Aussies in the Bay Area, Kiwis similarly, and so that community tends to naturally form wherever Aussies and Kiwis are. And if we can hopefully play a role in having the best connective tissue amongst that community, we have the best chance of finding the best founders. I don't think we have a particular advantage in identifying a non-Australian, non-Kiwi, and obviously venture capital is a very scary industry in that it's extremely prone to adverse selection. You can invest in lots of companies, but can you invest in the best companies? That is the danger. And so I think the only way we can look ourselves in the mirror is to say, if we put our heart into the community, we have a chance of finding the best Aussies and Kiwis.
Right. So what percentage of your portfolio is based outside of Australia or New Zealand?
This is forever changing. So I would say 5 years ago, it was it's forever changing from the point of view that it might start in Australia as they start. So the product and engineering team in Australia and New Zealand, they start to get customers. That's mainly in the US. As they start to get customers, they open up a US office and those customer-facing roles in the US, and they raise global capital. Normally, I would say of the portfolio, about 80% of all the capital that every company has raised is from the global investors from the US and from China. And so the sort of capital raising gravity pulls them towards the US as well. And so I would say 5 years ago, naturally, a company's center of gravity would move to the US, and the majority of the portfolio, and certainly weighted to the success, would be in the US. I would say that has broken down in the last 5 years, and particularly in the last 2 years with COVID. I'd also say that the one company that didn't follow that playbook was Canva. Canva always kept, they have a significant office in the Philippines, but they have 2/3 of their employees in Sydney. And even for customer facing, even for senior executives, they were able to attract people from all around the world to move to Sydney. They had no connection to Australia. It was just simply the opportunity to work with Canva. And I think Canva has sort of almost proven that you can build a 2,500 person organization without a significant US presence there. They just opened up their Austin office, I think it was last year, and it still has a very small amount of people compared to the total amount of people at Canva. And so 5 years ago, I would say nearly the majority of companies would be in the Bay Area / the US. Now, I would say they've still got customer-facing offices and still got a significant portion of their team in the US, but more likely to keep the center of gravity in Australia. And then I would say a combination of sort of the Donald Trump era of immigration, COVID, San Francisco breaking as a city, San Francisco breaking as a, it's just like such a high cost of salary, and then combined with the high churn rate. So even if you chose to pay the high salaries, that person had a higher chance of leaving per year to another company or so on, versus in Sydney or in Melbourne or anywhere in Australia, you could attract really great people for cheaper who would stick around. And sort of the math just I think broke down. I think so where a lot of the US offices of the portfolio companies used to be in the Bay Area, now it's much more common. I would say Denver is a city that seemed to sort of randomly attract, but then has got a network effect of Aussie companies in Denver now. Austin, Salt Lake City, Portland, those are the sorts of cities I think that companies are choosing to base their customer-facing offices in.
Yeah. It's interesting that Canva opened an office in Austin. I presume they're in Silicon Valley as well, or not?
No, they're not. I mean, I think they have remote employees, but they only have an office in Austin.
Oh, I see. So they chose Austin to base their US office rather than Silicon Valley. Okay, well, that is the trend. So that's really interesting. Okay, no, I was going to ask you about, this shifting of Silicon Valley and global tech hubs, and where it's all leading. And of course, we know there's been kind of a shift away from China tech because of all the the regulations and the issues around that. But I mean, what is the next big global hub in your opinion?
I do think it is China, and I think
don't think it's China. Okay.
I'm pretty optimistic. I mean, I'm absolutely optimistic about China, and I think particularly where China transformed itself from a sort of adapt successful ideas to the local market of China to pioneering and leading with original ideas on a global stage. I think ByteDance is such a powerful marker of change in the world order that most of the original thinking around consumer products, consumer internet, is coming from China now. There's other companies like Bilibili that, again, there's other trends like live shopping. There's other a sort of consumer behavior that is being pioneered in China that gets, everyone's trying to copy WeChat. like Facebook is a copycat of Chinese companies now, not the other way around. So I think purely because of that, I know obviously there's regulation. I know there's tension between the US and China, and even China and Australia, unfortunately. But I just think that that force of originality and that force of these wonderful global champion companies like Tencent, China is inevitably going to, keep rising, keep growing, keep, I would say on a probabilistic level, has a chance, has more chance to be bigger than the US in 20 or 30 years.
Okay, so which tech company do you admire most?
I do love Tencent. It is in terms of like a personal investment, not Blackbird investment. I just think it is so interesting as to both from a product standpoint with WeChat and the financial aspects of WeChat transactions, and the ability to be the world's greatest investor. If you look at, it's almost like Tencent is the SoftBank Vision Fund done well. Tencent is, I think, has taken investing to a new level and is underappreciated as to how high quality and Snapchat and Tesla and as well as obviously all of the Chinese investments that it's made and the global investments are just, I just think taking the ego out of owning all of something, which I think Google and Facebook and Apple and so on have had this ego that they need to own everything, and it's almost sad to watch Facebook when some interesting company pops up like Clubhouse, they'll do their own version of it, or they Foursquare launches a decade ago they tried to do their version of Foursquare. It's this sad sort of like, instead of investing in those pioneering companies and owning 5% or 10% or whatever percent, they have these internal teams work on these copycat products that seem to have 100% chance of not working, like Google Plus, or it's just
it's been a series, a whole series of them.
I think from a like a sort of openness to again be a minority holder versus having to be the majority or the own it all. I think that's what's limited Google, Facebook, and Apple, and that is conversely what has unleashed or opened up with Tencent in particular.
Oh, I see. Okay, because Facebook acquires these companies, right? Is that what you're saying? And then they kind of sap all the creative energy out of it?
Yeah, well, they used to be able to, but I just don't think they will be able to now. Like, again, Facebook, there's the Apple ad tracking and there's all these other things, but essentially it's TikTok. They can't, like, yes, they acquired WhatsApp, yes, they acquired Instagram, but no, they didn't acquire TikTok. So I think it's always going to leave them vulnerable because of this sort of like, we have to own it mindset.
Right. So what was your point about the difference between them and the Tencent and the majority-minority investment? What was the point there?
Yeah, well, if you look at Tencent, it's an operating business, but it's an investment portfolio. And you look at all of the investments that Tencent has made and the results of those investments over a very, very long period of time. And you look at how they've invested across the early stages and they've invested across the late stages when Snap was in trouble or when Tesla was in trouble. Tesla Tencent was a 5% owner of Tesla and 5% owner of Snapchat. The sort of investment track record to support like a culture of great investments with great operating businesses. I don't think any technology company has perfected that as much as Tencent.
I see. Okay. So which entrepreneur do you admire most these days?
I think it's not particularly original or unique, but it is just so fascinating to see Elon Musk in just, again, the naivety, going back to naivety being a positive force for change, for him to go into all of these different areas of industry and just succeed in this wild sense of electric vehicles or rockets or neural computers or underground tunnel networks or payment systems, or he originally founded a restaurant review site for newspapers. It's just incredible the breadth of anything he turns his mind to, and the success rate of becoming an expert, having a vision for how it could be dramatically different, and then making it dramatically different. I just don't think we'll ever see someone, quite on that scale
Yeah.
ever again, at least in my lifetime.
Yeah, in so many different product areas. Like Steve Jobs was kind of more focused on, computer stuff and mobile stuff, but Elon Musk is all over the place. So it is amazing. Okay, there's a question in here about AI, so I have to slip this one in. What's your view of AI? And then is that an area that you like to invest in? Is this like one of the big disruptors of the century? And what about AI for dentistry? Somebody here, I think, has got an AI dentistry startup or something. But I mean, why don't we just start off with what's your view of AI and its potential for disruptive innovation? Is this like the next, or is it the metaverse kind of surpassed AI now, and crypto surpassed AI? And well, just in general.
No, I mean, look, on one level, I would say AI is the central change agent for all of these industries in the next 10 years. But I don't think we necessarily want to invest in an AI company. To take the example of Zoox, for instance, Zoox never described itself as an AI company. It was always a robo-taxi company. It was always the end experience. It was always the change it brought about versus how it brought about that change. And if you looked at the team at Zoox, I think 70% were software, and nearly all the software people were AI engineers. And so from any kind of measure, Zoox was an AI company. That's where all of its money was spent on the team, and within that team, all AI software engineers. And so I think AI is this sort of ticket for entrepreneurs to reimagine an industry, to like completely different, differently think about the product. And I think healthcare AI, whether it is in a medical imaging sense, whether it is in a surgical robotic sense, I think robotics of any kind, whether warehouse or industrial and so on, I think particularly, I think AI is, in the first instance, sort of machine learning, and it's very sort of still in partnership with humans and brittle rules and if-then and scenarios, and very human sort of rules-based approach. Versus if you look at sort of DeepMind and their approach in reinforcement learning, and it's almost like the computer teaches the computer how to create the algorithm. I think reinforcement learning represents another huge leap forward in an AI approach that will make it possible for all of these robotics to do things without, to drive the Tesla just with the camera, for instance, rather than all of the other sensors. I've sort of come around to the view that actually reinforcement learning is such a leap forward that potentially it ends up making that hardware requirement so, reducing that hardware requirement, reducing that sensor requirement, such that you can get a better level of performance with way less hardware and way less sensors. And so I think AI is so fascinating. AI gives you the opportunity to reimagine these industries, but it has to be in that reimagination that you fall in love. It has to be in that end result that is interesting. It can't be just that they're using AI. That's not interesting. The way in which something is changed is interesting.
Right. Okay, good. So we'll have to hear more about AI for dentistry at some point. Maybe Ben Bowie would want to follow up with you on that one.
There you go.
But anyhow, so what about the metaverse? I was interviewing Yatsu today of Animoca Brands from Hong Kong, and he's an amazing guy. Talking about blockchain and crypto and NFTs and the metaverse and how it's Web 3.0. I mean, what's your view of the metaverse? Is this just all hype at this point? Is it reality? Where's it going? What's your view?
Yeah. my view is the metaverse is is so high level that it doesn't mean anything, which meaning can be brought to it over time. And I'm not saying that it won't be successful, but at this point in time, it's sort of unclear exactly, is it VR, is it crypto, is it NFTs, is it Web3, and so I think at that level of all those subcomponents, I think again there's interesting things happening in all of those. So therefore, I guess you could say that the metaverse is interesting, but I think it's probably a word, at least in February 2022, that is it's too hazy of a word or too foggy of a word. There are interesting companies. Just like there are many uninteresting companies. Like it's such an area where there is a lot of excitement, so there is a lot of noise to signal ratio. I'd say, in perhaps that category of founder and that category of entrepreneur, it has a much higher noise to signal ratio because you have the real people, and then you have the people who are unreal or who are there for different motives and there for different reasons, and there to camouflage themselves into some trend, there to scam people, there to whatever it might be. So it has a high noise to signal ratio, but there is signal there. So that would be my comment.
I like the way you put that. That's great. And is that the same thing that's happening in crypto with Ethereum and Coinbase and all these e-wallets that are coming out there? I mean, what's your view on just general cryptocurrency? Is this going to be the future?
Not yet. Although there are some, again, personally, there's not a clear pathway to this will be the future comment. There are some interesting approaches and interesting technical breakthroughs and interesting approaches. But I would still say, in Ethereum in 2022, the future of payments is not paying $20 gas fees for 3 different steps in a single transaction to send someone $100 in value. So I would say that is particularly, but again, there are lots of people with layer 2 ideas. There are lots of people with layer 1 ideas as to how to make that not a problem. And so again, there's lots of approaches, lots of attempts, but not clear that the right combination is taking off quite yet from a business or a consumer point of view. But I think there's plenty of interesting approaches, and I think there will be breakthroughs. I think NFTs, that's in particular the technology breakthrough of being able to capture royalty payments and secondary transactions of someone selling a piece of work, and to be able to be compensated on a secondary basis through code and through the actual Ethereum token is like that combination of technology and business problem is extremely exciting. The levels of price per NFT or type of NFT or price of all of that is will be ups and downs and a wild ride, but at a basic level, I think, particularly in an NFT sense, that combination of technology and business has come together, that we'll see a lot more adoption and a lot more use cases, and hopefully, a lot more sensible or a little less excitement in sort of its adoption and so on, just to make it mainstream and to make it usable versus to make it feel like it's a casino, or the interesting thing is about the movement of the price rather than the product itself. Right.
Well put. Very, very interesting. Thank you. A great discussion. Really great. So I'm going to be just getting us to our next point in the show. And so just give me a second here. And okay, I really enjoyed your remarks, Niki. I think you're very thoughtful, and I like the way you frame your thoughts, and very articulate. And obviously you've given a lot of thought to your own strategy of investing. And I think Canva is going to be a huge hit when it already is a huge hit sales wise. but we'll have magnificent returns for your firm, I'm sure. So anyhow, I'd like to also say a few words about our next program. Our next Ask a VC program is going to be with Carmen Ewan from Vertex Ventures. So we're kind of like spanning the globe. As I said, we've had more than 40 VCs on the show from everywhere practically. So she's joining us from Singapore, and that's March 16th at 4 p.m. California time. And next week we have a show which is a bit of a diversion. We're going to be talking about China-US tech and whether a reset is in sight, because as we know, the conflicts are pretty extreme right now, and there's not a lot of cooperation or collaboration going on, at least not compared to what it was 4 years ago. So where are we headed with this? Is a reset in sight, and we have a number of experts who are going to be weighing in on that topic. So hopefully you'll join us. That's actually next Wednesday, 4 o'clock California time again. Okay, and then looking into the future, we're going to be doing a salon event for Start Me Up Hong Kong, and that's going to be April 26th, 5 p.m. Pacific time. So we have a number of VCs joining us, both from Hong Kong and also from Silicon Valley, to discuss what's happening in Hong Kong. And Hong Kong is we didn't get to this topic actually today. I should have asked you a little bit more about it, Niki, but your view on Hong Kong and its future. But anyhow, hopefully you'll join us for this show, which is coming up in April. And anyone who joins our Silicon Dragon Circle goes to all of the events and gets to participate in them live. So that's a plus, I think. So let's give another round of thanks to Niki, and really enjoyed having you on the show.
Thank you for having me. Thanks, everyone.
Okay, good. All right. Well, good night or good morning, wherever you are. Take care. Bye-bye.